Let's get to earnings now. We have Amazon coming out in just the past few moments. And really what stands out to me, let's just hop right to it, is the second quarter operating income forecast of $13 billion to $17.5 billion. Now, two things there. It's short of estimates is number one. The average analyst estimate for operating income was $17.8 billion for that second quarter. And the other thing that stands out to me is how wide that range is. $13 billion to $17.5 billion, an unusually wide range, which reflects the unusual and uncertain operating environment under which Amazon is operating right now, and so many other companies as well. We talked about the effect that tariffs are having both directly on the company and indirectly on the company, on the sellers that operate on its platform. It gives a lot of services to them, so all of that having an effect. So that's the forecast, getting that out of the way. Now let's talk about the numbers for the last quarter. And those numbers looking pretty good on balance here. First quarter earnings per share, $1.59. That's versus the $1.36 that analysts have been looking for. AWS net sales, $29.27 billion. That is just shy of what analysts had been anticipating. And so that also could be a focus for investors here. But Josh Schaefer here with me on set. And overall, the numbers last quarter looking good, but that outlook is a bit of a punch.
Yeah, absolutely, Julian. You mentioned it. It's really the range there, right? Thinking about the fact of swinging from operating income of anywhere between $13 billion to $17.5 billion. We're playing with very large numbers here. That is a significant amount of money that we were talking about that is up in the air. So basically, you're sort of feeding into what I think a lot of the investor fear has been around Amazon, which is an extended exposure to China, extended exposure to tariffs, and what does that actually mean for the company? And perhaps they're saying a little bit right now, they're not quite sure yet, right? And I think that feeds into the moment a little bit. Other thing I wanted to point out here when you were highlighting second quarter net sales, that's also a rather wide range-ish relatively, $159 billion to $164 billion. The estimate was for $161. But again, just a decent sized range there when we're starting to play with high numbers. I think it's going to be interesting when we get to the call to really sort of hear a little bit more commentary on exactly what they're factoring in terms of the high end and the low end of that operating income. Like, is the low end full China tariffs? Is that sort of the fear here? How do you sort of assess that part of it? But again, shares are down about 5% right now, and I think that's really probably just the key driver.
Yeah, I'm looking at the release now, which is just coming through and doesn't have a lot of commentary around that guidance. Presumably we'll get that on the call here, but the company does have a long list of what is going into the financial guidance. They do say it is subject to substantial uncertainty. It says the following forward-looking statements reflect Amazon's expectations as of May 1st, 2025, and are subject to substantial uncertainty. Our results, they say, are inherently unpredictable, could be materially affected by many factors. Foreign exchange rate fluctuations, changes in global economic and geopolitical conditions, tariff and trade policies, and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, etc. But you get the idea here that there is this weight, this cloud hanging over them that includes just a lot of X factors right now.
And it's interesting, especially with a company like Amazon, Julie, right? Because they do have so many different parts of this business. They're talking about recessionary fears and consumer spending. Obviously, Amazon sells stuff online to a lot of us, right?
Yeah.
So that's part of the story always with Amazon. But then it's also the B2B part of Amazon's business, AWS. And how does cloud spending play out if we do get some level of an economic slowdown? How does ad spending play out if we get some level of an economic? Every little piece of their business is, yes, tied to the tariff story perhaps, but also just tied to the economic story that's built off the tariff story. And there's so many different offshoots that I'm sort of curious what the focus is going to be from investors as we move out of the call, right? What part of the business matters the most right now and are we most concerned about or could be a driver?
Yeah, it's a great question. For more reaction to Amazon earnings, we're bringing in Rohit Kulkarni, Managing Director and Senior Research Analyst at Roth MKM. You heard us just talking about Amazon here and the diversity of its business, which at times is a real strength and superpower for Amazon. But at a time like this, Rohit, does it mean that multiple different parts of its business are vulnerable at the same time?
Yeah, absolutely. I think the surface area of risk and the surface area of exposure to China tariffs and geopolitical and macroeconomic uncertainty that Amazon has is unlike any other. So they solve a complicated problem, they get rewarded for solving that. But when there is a complicated problem that presents itself, I think the complexity increases. I think in the release and the stock reaction, I would just flag two things. One is after Microsoft, after Meta, after Google, I think the expectations were slightly elevated. The beat was expected, but raise was also expected. I think that's what was the expectation going into the print. So I think in isolation, these are really solid numbers, but Q2 guide, as you exactly said, Julie, the margin guidance is below expectations, and we'll need to find out what's going on over there.
Rohit, it's Josh here. I'm curious with that second quarter operating income guidance, the range just sticks out to me, right? We're talking about 13 billion to 17 billion. I mean, what do you make of the range and what do you think is going on there?
I think there are a couple of things that are one-time in nature. So recently, they started to launch these new satellites. That has been something somewhat delayed. Probably there is a one-time spend in how much they're going to spend on Kuiper and the entire kind of low Earth orbit satellite launches that they're doing. I think that probably requires some explanation. But on top of that, probably there is around how much are they going to spend on AI and AI-related kind of improvements across the entire spectrum of things. Amazon, we know, is going to spend more than $100 billion in CapEx. That flows through the operating expenses and that starts to add a thicker layer of spend. So I think these two questions would probably help us understand, is this a one-time hit that the company is taking in margins, or is this something that as the year progresses, probably we got to add more spend. And plus, there is obviously the China tariff unknown that nobody knows how to solve that.
No, they do not. Rohit, two follow-up questions to that. One, do you think there is any risk that they will be cutting that CapEx plan?
So far, what we have heard from the three other large companies, Google, again, Meta, and Microsoft, they are strong and long on AI. So I expect nothing else from Amazon as well. From a long thesis perspective, I think Amazon has the biggest, again, surface area of being the biggest beneficiary of AI going forward. They have the video platform, they have the advertising platform, they have the cloud platform, and of course, they have the e-commerce. No other company has the various different pillars where each of those pillars can benefit from AI and infrastructure spend. So I feel I think, if any, in fact, just as how Meta increased their CapEx yesterday, we wouldn't be surprised if Amazon also does the same today.
And when we're talking about that operating income forecast, put it in context for us. How does Amazon usually approach these forecasts? Does it tend to be conservative? You know, should we assume that they're going to come out and beat that forecast? How should we be thinking about that?
I think the wider range probably implies there are certain one-time costs that they may or may not incur. That's my first interpretation. But historically, very rarely has Amazon missed on their operating income forecast going back many quarters. So I feel there is an extra layer of conservatism and there is an extra layer of perhaps one-time items that they may be incurring, like the Kuiper launch I mentioned. So in my opinion, street numbers would probably grind slightly higher. And so if we hear not too many negative things on the call, like CapEx or whatnot, then we would be buyers of Amazon shares tonight in this weakness.